Welcome to another video from Trading Manifest. If you're visiting my channel for the first time, you can click the link in the top and watch my introductory video to find out what the channel's mission is. In today's course, we're going to deep dive into one of the most important topics in technical analysis, and that is support and resistance levels. As usual, let's see what we're going to cover throughout this course. At the start, we will discuss what support and resistance levels are. Next, I'll tell you how to identify a support or resistance level. Then, I'll show you how to draw a level properly with a few examples. After that, I will reveal the trading manifest approach when it comes to support and resistance levels. And finally, I'll end the video with a quick wrap up. Without further ado, let's begin. A support or resistance level is simply a certain price or a zone of prices in which we see rejections or reversals in the primary trend. Notice that I said a price or a zone of prices. That's because the majority of the times the market does not act in a perfect way and bounces back from the levels that are a little bit out of our exact desired price. So we define a zone instead of a single price to analyze our charts. Okay, now how can we identify a level correctly? There are three cases when we count a price or a zone as a support or a resistance. The first one is round numbers. I'm referring to numbers that have a sense of uniformity or symmetry, like 1111 or 1.5656 and so on. They have some sort of psychological weight on the trader's minds, like the Euro USD. As we see, the market's trend reverses as soon as it touches the 1.50's number. So we can say this is definitely a level we want to consider. 2 is the most recent high or low of the day, like this one and this one on the gold chart. The reason this low and high are important is that many short period trend traders jump into the market's daily trend and put their stop losses below or above these levels. Number 3 is when a great pullback occurs in a random price, because sometimes market does that for no reason. A good example is USD against the Japanese yen. As we see, the market experienced a big rejection not from the 149 exactly, but from 149.127 instead. So we would consider this price as one of the resistance levels as well. Alright. Now that we know what we're looking for, it's time to practice what we learned so far. For the first example, let's have a look at the Dow Jones Index. The highest and the lowest points of the chart are obvious, so we consider them as resistance and support. We also can count this line as one of our resistances. But we're not done yet. We have so many shadows and break like these on the chart. However, we cannot draw a single horizontal line for all of them, since they didn't occur in the same price. Should we draw a line for each one of them? No, absolutely not. Because in this case, our chart will be filled with useless lines and we cannot decide where to enter the market. Instead, we define a zone, as I mentioned, that includes all the breakpoints and shadows that are close to each other. Now, how would you know that the shadows or breaks are close enough to each other to put them in one zone? I must say, this comes with your own experience. It depends on factors like the asset and the time frame you're looking at. But this is not too hard. I'm sure you'll figure it out pretty quickly. This simple example is so important and I'll get back to it in a very short time. Moving on to the next example. I see a key support zone here and a resistance zone here. I do not count these prices as one zone. We can simply draw one line for them because they are so close to one another. And finally, we have this support level here. This example of the gold represents a very important trading scenario, which I will elaborate on in the next section. I think we are done with the examples as I covered the essential information you need. Now it's time to reveal my strategy. I have a really simple strategy for support and resistance levels. I only use them to detect a stop hunt. And what do I mean by stop hunt? Let me remind you that key support and resistance zones are places that many traders put their stop losses at. And a lot of the times, the price will break above or below these zones to grab liquidity to move in the opposite direction. This is called the stop hunt. Let me show you with an example. Let's examine the gold chart again. We can identify a support zone here. As I told you, there are many stop losses below this green zone. Let's say these stops are somewhere inside this red box. The market takes all the stop losses that the buyers put below the green zone with this big red candle. Now, what is the stop loss of a buyer? Yes, it's a sell position that has been activated now. Therefore, it provides some cheap bid options for the major buyers, and consequently, market starts a bull run after the stop hunt. Okay, now that we know what a stop hunt is, let's get back to our first example. If I was given this chart, how would I trade it? Well, the first thing that I notice is that this level is so close to this level, and this zone is very close to this one. In this case, I'm not going to risk entering a trade in the levels that are not my highest or lowest on the chart, because then I have to put my stop loss at the highest or lowest zone, and the chances of it getting hit will grow significantly. Instead, I get rid of the middle levels and keep the two highest and lowest levels only. Then, I take a look at my fundamental information for the asset I'm trading. If the information gives a bullish or a buy signal, I put a buy limit order at this level. If it gives a bearish or a sell signal, I put a sell limit order at this level. Then I'll wait to see if my order is triggered by the market. This way, I can buy for a cheap price and sell for an expensive price. Let's consider a different scenario this time. We have to take a closer look at the example number 2. As you can see, we drew 4 levels on this chart. Just like the first example, the two resistance levels are so close to each other. So if I were to take a short position on the gold, I would remove the lower resistance and then put a sell limit order on the highest resistance level. But something is different about this chart in comparison to the previous one. The two support levels are far from each other. What do we do now? If our fundamental information tells us it's time to buy, where should we enter the market? In this case, I would say everyone knows the market has a bullish trend. Therefore, it's very unlikely for the price to hunt the lowest support level again. So I put a buy limit order at this level and put my stop loss at the lowest support level as we see. If you don't know how I set my stop loss and take profit, do not worry. I will create a full playlist on risk management and will explain all the rules and tricks for setting up solid stop losses and take profits. Alright guys, I will quickly wrap up what we learned in this course. First, we saw the definition of support or resistance level and that sometimes levels can be zones instead of horizontal lines. Next, we figured out how to identify and draw levels on the charts with two important examples. Then I revealed my strategy and you found out I only use support and resistance levels to look for stop hunts. At the end, you learned which level your trade should be triggered at. That's it for this video guys. Thanks for watching and I'll see you in the